Hey, good morning, everybody. I hope you had a great Memorial Day weekend as we start the last week of May. Not much in the way of earnings this week, but we do have some economic data that's going to come out later this week, and there are still a few earnings to come in. But I hope you guys had a great weekend, and we look forward to our program today as we get ready to talk to Dave and figure out kind of what's happening in the world here. So hang tight. He'll be with us in just a moment. Hey, though, before Dave does come on, I did forget that I want to remind you that we have our free um, Understanding Market Corrections report that we'd like to offer you guys today. And so continue to text us to get that. Then all you have to do is text the word market to 863-285-3815. That's text the word market to 863-285-3815 for your free report on understanding market corrections.
5.7 Light FM. As Maroon 5 there, we're at 8:39. It's 21 here before 9. Time to get the week going. I mean, yesterday I was able to tell you what was going on across the pond because it was Memorial Day for us. Everywhere else in the world it was Monday. Now we're actually going to throw real money around on Wall Street. Let's find out what's going on. Phillip Statler is in his office at Statler Financial Services in downtown Sebring. And something that you and I have been watching, Phillip, and talking about has actually happened. We watched the bond prices, and I'm looking at it this morning. The two that I get, the 3-month Treasury bills closed at 2.30%, and the 10-year Treasury bill this morning is at 2.30%. That's called an inversion, and that really messes with a lot of brains on Wall Street, doesn't it?
It does, and that's not the only inversion that we're seeing right now. Now, I'm going to a chart that was put together earlier this morning.
You've got a much more complete list than I do, and just the 3 and the 10 scared me. You've got something even more interesting.
Yeah, because I think this is about 7:30 this morning or so that this came out. So the 10-year, like you said, is at, well, you got 230. It was at 229 back at 7:30 this morning. And so we look at the 5-year. The 5-year is at 2.09, which is okay compared to the 10-year. But if we look at the 5-year compared to everything shorter than it, it's lower. The 2-year is trading at 2.14 right now, or in 7:30 at 7:30. The 1-year is at 2.32, and like you said, the 3-month was at 2.35. So everything shorter than that 5-year period is actually yielding a higher return than the 5-year Treasury. So we call that an inverted yield curve, and the bond traders, they don't like that.
And that scares the bejesus. The other indication, too, kind of it gives you a reading as to what the equity investors that are fleeing to safety figure the time frame is going to be for the headaches and the volatility on the market. And judging by the way they're buying 5-year bonds, you kind of look at it and say, well, they're kind of thinking this is going to be a 5-year picture because they are not buying the short-term ones as a quickie flight to safety.
No, they're not. You're right. They are buying 5 years, and that's really what that indicates. Is as the yield goes down, that means people are buying more and more of them, and so that drives the yield of that 5-year down.
Yeah, the more they buy it, the more the yield goes down. So you get a whole bunch of things. Number one, bond investors are flying around the room backwards right now. Equity investors are saying, okay, we're starting to get a majority vote here almost as to how long this volatility is going to take. And 5 years is not exactly what a lot of us would have in mind as an ideal setting.
Absolutely not. We would hope not. That we would hope 5 years from now we would be better off than where we are right now.
And the indications are that at the very least, some smart money is saying 5 years of having my money go nowhere, which is pretty much what we're talking about with bonds, beats the crud out of putting it at risk in the stock market. I found it really interesting that the yields actually been going up on those shorter term bonds, which is both disturbing and interesting at the same time.
It really is. You know, it is an interesting thing to see those short term rates up higher than the longer term rates. And so we continue to watch that and see how that progresses over the rest of this week.
Understood. The other thing that's interesting that's happened over the weekend, I hadn't heard about, but you did. This does not happen in a command and control economy. In China, we always crack wise about how when they put out an economic report, it doesn't look as good as anybody expected. You wonder if reality was, somewhere on completely the other side of the zero base. Banks do not fail in China. They just don't allow that. But whoops, I guess they can, huh?
Well, they've basically the China government has kind of lifted its hands off of corporates and now will let them fail. So Friday after the market closed, there was a bank that came in, and the Chinese regulators came in and basically took over the bank. It was the bank is called Boshang Bank. Due to some serious credit risk that it had right there. It's in the inner base of Magnolia. Magnolia. And so, that was kind of interesting as to what that really means. And it caught people off guard. They did it after the market closed, which I guess they're trying to stave off a run. But it has caused some fear, I think, in the markets of China.
Oh, absolutely. Even in the world where the Chinese are letting money go where money goes, generally there's this kind of a range in which they let it go, and generally the range does not include letting a bank go toes up. So that's really kind of a surprise. It's got to put a little bit of a jitter on the international financial markets, and give China a little bit stronger incentive to negotiate with Trump and our trade disagreements with them.
Well, we'll see how much that really works out or not, but because they're pretty hard-headed, just like Trump's pretty hard-headed. So we'll have to wait and see what the rhetoric ends up looking like, and hopefully they'll quit talking and get something put together.
Would be nice. Over the weekend in Japan, President Trump was making conciliatory noises. He wasn't saying he was doing anything, but so he honestly thought that the Chinese negotiations would go nicely, and Japan, our differences with them, that we'd be able to settle amicably, yada, 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 which at the very least beats tweeting we're going to nuke your economy and leave you a smoldering mess, which is a little closer to what the tone had been before that. Friday wasn't a bad day on Wall Street. We were at least a modest amount of green ink across the board. What have we got that's likely to move the market this week? Because it's a real quiet Tuesday so far.
It is quiet. There's not much in the way of earnings coming out. I mean, there's probably a little over 100 earnings coming out this week. But I think if we look at the economic calendar, there's the Case-Shiller housing price composite that comes out this week. The biggest thing I think that comes out Thursday is a huge day. We have corporate profits. We've got crude oil inventory. We've got the second reading of the GDP. I think that will be interesting, and along with initial claims that day. So that's going to disposable income comes out on Thursday. So a lot of stuff coming out on Thursday. Friday, there's a few personal income, personal savings, personal spending numbers all come out. So we do have some economic numbers to come out, but I think on the earnings front, we're not going to see a whole lot there.
Not a lot of names that I recognize that I see on the schedule so far. Anyway, I agree. The GDP number on the Thursday probably could be a market mover. If memory serves, it was a pleasant surprise on the first reading when we got it a month ago, doesn't it?
That's right. And so we'll see if it continues to move the needle upwards.
It would help a little bit. What do we got going on with the interest rate inversion? I kind of would have expected red ink on the stock market this morning 45 minutes early, but so far it looks like we're kind of sitting on our hands to see what's going on. 45 minutes early. Phillip, which way are we going so far today?
So we've been fluctuating back and forth. I mean, when I first got up this morning and looked, we were green. Before I left to come to the office, we were red. Now we're back to the green again. So we don't know which direction we're really going. It's really kind of flat. I mean, the Dow's at $22, less than 0.1%. The S&P 500 is basically flat. The Nasdaq is up $12, which is about not quite 0.2%. Gold and silver both heading down. Silver's down over 1.5% this morning, down to $14.32. And then,
Ooh.
Yeah, really. And then crude oil is up 0.7% to $59.04 a barrel right now.
Yeah, we were under 59 healthily yesterday morning at this time. I found that kind of heartening, given the fact that I was doing a long drive yesterday, and I got some pretty cheap gas on the drive down to Fort Lauderdale.
Well, we'll see. I mean, I like to see it down. I haven't had to fill up yet this week, so or over the weekend. So I'd like gas prices to come down before I have to do that too.
Yeah, wait until they get the bill from this week's Phillip. It might be a little bit lower. Overseas markets are frankly confusing. The Asian Rim markets mostly in green ink at the close this morning, given the upset in China. That surprises me. I'm even more surprised by Europe with all the Brexit upset going on over in Great Britain. European markets are also in the green this morning, 45 minutes before we start trading. Phillip, somebody needs some advice as far as stabilization and how to make a retirement account grow, or at the very least not shrink. If you're a few years away from retirement, that's even more important. How do I find you on the phone?
Yeah, it really is, Dave. You know, one of the things that we've put together because of all this stuff happening in the market, we've put together a report on understanding market corrections, and folks out there can actually get it really easy. All they have to do is text the word market to 863-285-3815. Just that's all they have to do. Just text the word market to 863-285-3815. To schedule a time to visit with us, they can call us at 382-0037. Catch us every weekend for the Statler Financial Radio Show, noon on Saturdays, 10 a.m. on Sunday mornings.
On News Talk 730 a.m. and streamed as well at newstalk730am.com. Phillip, thank you so much. I'm glad to have you back after a long weekend, and we'll catch you tomorrow. All right?
All right, sounds good, Dave. Thanks.
Thank you, my friend. It's 105.7 Light FM and Statler Financial Services. Phillip Statler.
Again, folks, I want to thank you for joining us today. I hope you had a happy Memorial Day weekend and had fun and exciting times with your family. But again, I want to remind you that we do have our free report, Understanding Market Corrections. All you have to do is text the word market to 863-285-3815. I hope you enjoy it. Look forward to speaking to you tomorrow. Have a great day.